Hi there, I'm Blaine with Dryrun, and I wanted to walk you through just a quick overview of how you could use Dryrun in the context of an e-commerce company to better understand what your cash flow looks like, what your timing of the inflows and outflows look like to make sure you're staying well ahead of the game and you're going to have not only a profitable business, but one that stays cash flow positive. So in dry run here, you'll see we have a single scenario, and it's our cash flow scenario. And if I expand this scenario, you'll see we've got a cash in section, cash out, and our recurring expenses. Now, the cash in can be fairly straightforward. Near term, we have our bank deposits that are coming in, and we can sort of predict when that money is going to come in. We've got a sales forecast. So further out, we have a better idea of what do we expect them to look like? When do we think those dollars are going to start coming into the business? And then in cash out, we've got a lot of different expenses here, ad spend and things like that. But inventory is one of the most challenging ones. When are you going to buy inventory? And so that's what I'm going to do for this little example here is look at just the timing of some inventory purchases. And then, of course, we have some of our recurring costs, such as payroll and office expenses, maybe warehouse expenses and those sorts of things. So if I look at this scenario, you see that we're going to run into a little bit of a problem in May. We're going to be underwater here cash flow wise, and that's a real concern. So let's take a look at what's happening. So if I go into my cash out section here, you can see that this month we're dropping a deposit for some widgets that we're going to buy. And then in April, we're going to complete that purchase. And in May, we're going to have to pay for the freight so that we can send those widgets to us. But what's also happening and why we're running into a bit of a problem is that we're also putting a deposit down in April for some gizmos we want to buy, and we have to pay off the balance in May. And so the timing of those payments are going to cause us a ton of problems because, as you can see from our sales forecast, we just don't have enough money coming in to support us in that way. So let's take a look at what happens if we just make a what if scenario and delay the purchase of those gizmos just by a couple of months. Well, now you can see at a glance, we're good. We never go into the red. And if I go into my cash out section here, look at my inventory, you can see what we're doing is we're just delaying our gizmo purchase till May. And I've negotiated that we're actually not going to do the final purchase of those gizmos till July, and then freight will come later. So that way we can stay well ahead of the game. Now, this is just a single inventory purchase, a single scenario. But when you start looking at the timing of those bank deposits, sales that are likely variable to some degree up and down, maybe based on seasonality, and then you have your ad spend, and you have spend on maybe marketing and events, and you have spend on expanding your team, maybe during the busy season. And then on top of that, maybe numerous inventory purchases throughout the year, that your cash flow can get really complicated. So even though on paper you may be a highly profitable business, those cash flow timing issues can cause you all sorts of problems. And you can see here on the graph, we're either going to end up 194,000 into the red or 174 into the black. So if you want to see if Dryrun might be a fit for you, just come and visit us at dryrun.com. We'd be happy to walk you through a demo of Dryrun and see if we might be able to help. Thanks again.